This is Matt from InvestiQuant. Today is Wednesday, August 4, 2021. This morning we saw the markets gap down within the prior day range, and we have seen some sideways action most of the session. I'm looking at the S&P right here in this top left chart. You can see relative to yesterday's range, which has this big range here going from 43.65 quarter all the way up to 44.17. We are just trading a small portion of that area so far today. We've gone sideways. We've tested a little bit higher, failed, tested lower, and bounced. Now we're trading back up near the highs of the session. We've got 17 points of range, which is about half of what we have been averaging for a 5-day ATR. So we've got light range and are currently trading just slightly green on the session, just going above the opening here, above the opening print right now in the S&P. It's not the case in the Dow, which is down here in the bottom right. You can see the Russell's almost back up to the open. It has not quite crossed the open yet. And then you've got in this bottom left chart the NASDAQ, which is trading up above yesterday's high, well above the open as well. But what we're going to be looking at this afternoon is a pattern taking place here in the S&P, where you have a bullish outside day the prior session, and then you get a quiet range that is trading above the open as we trade into the afternoon. So I'm going to get this set up, and I'm going to use a 3 p.m. Eastern Time entry that'll exit at 4:15 p.m. Eastern Time. And the opening filter we're going to skip over because we're going to try to keep as many samples as possible. We're going to go straight to the post-open filters and say that we are currently trading above the opening print. So I'm going to use this intraday close versus intraday range and hit equals next to close above the open. And I'm also going to describe the quiet type of price action that we're seeing. And I'm going to do that by saying that the intraday range is no more than 65% of the 5-day ATR. Now, we're currently sitting at about 50% of the 5-day ATR. I've opened it up a little bit to allow some range expansion if this was to expand into 3 o'clock, but this will keep the idea there as well as give us a few more samples than using 50% exactly, which is about where we're at right now. So that is what I'm going to use from the post-open filters. Next, I'm going to go down to the price patterns, and I'm going to say that yesterday was a bullish outside day. I'm going to grab that from the active today candlesticks. I'm going to click day after bullish outside day. It comes from our candlesticks library here. You can see if I scroll down, it's available. And then lastly, I'm going to put it in a similar market environment where we are above a 10 and above a 200-day simple moving average. And now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you have a bullish outside day in a bull market environment, followed up by a quiet session that is trading above its open as it approaches the closing hour of trading. So we've got 24 samples in the S&P to look at here dating back to 2003. We've got 33 for the NASDAQ, 34 for the Dow, and 14 for the Russell. So very few for the Russell there. If we look at the win rates on them, they are all just a little bit better than 50% with the exception of the Russell, which is exactly at 50% on its smaller sample size there. So S&P coming in 63% of these have closed higher than that 3 p.m. price. For the NASDAQ, 58. For the Dow, 56. And then Russell, again, 50% there exactly. The average moves on these are nearly identical for the S&P. For the NASDAQ, the loss is a little bit larger, and that is also the case for the Dow. The Russell loss is sizably larger than its average win. So the S&P definitely the most bullish of the group here with the best win rate and a pretty similar average win and average loss, whereas the others have win rates that are a little bit lighter, just north of 50%, with average losses that are larger than their average wins. So not the strongest edge here. I'm not seeing anything that's super compelling in this data, but I figured we would take a look at what this has led to. So hopefully you found this helpful. Good luck the rest of the day. We'll see you next time.